people, I'm Working Dad Trader, and this channel is all about helping the working class and parents like myself get a better future for themselves in the long term. It's the time of the month where we get to go through my Trading 212 portfolio. This is a series that I've been doing now for about 18 months, where every month we look at my Trading 212 portfolio and just see how it's been getting on. It's all real. I'm just in real time. Obviously, you get to see the things that have gone well and all the mistakes. I try and make it as real as possible for you guys so you can learn from it and see that it's not always easy trading the stock market, but it can be done by everybody. And I try and go through some of my decisions and why I've done certain things. So yeah, I've been doing this for about 18 months. How's the month been for you? It's been a bit of a sloppy month, and a lot of people have been slapped, especially at the start of the month where it was really quite bad. But things are improving. So as we can see, like in the S&P 500, it didn't quite make a bear market. It got down, and it was just a correction. It never made the 20% drop, which makes it a bear market. It never got there. It was only a correction. Unlike the Nasdaq, which did briefly touch the 20% drop, so that did go into a slight bear market, but only for about one day. But the S&P 500, which is unusual because it normally follows the Nasdaq, didn't get there. And as you can see from the chart, it's rebounded really quite well. So we're up, doing well again. As far as my Trading 212 portfolio, it started the month of March. It was minus 17.5% down, which is quite a big number. But as you can see now, as we end at the end of March, it's recovered a bit, and it's now only about minus 12.7. So it's been quite an improvement. Obviously, the end of February and the start of March was a really bad month with a lot of things going on, like the Ukraine-Russia situation and different things like that, and that made the stock market plummet. But these corrections happen a lot, almost yearly, and it's nothing to panic about. I've said before not to panic and just hold tight, and so that's what's happened. So let me get my coat off and we'll go through my portfolio. See you in a minute. So as we go down through my current Trading 212 portfolio, I have about 18 stocks in that portfolio. As we go and run down through it, obviously you can see people like Alibaba still down. Games Workshop is still minus 24%, having a big drag on my portfolio. That's plummeted quite a bit in the last sort of 6 to 9 months. As we go down through it, I bought things like, in the last month, I bought Nike, which I thought has been selling quite cheap. I've looked at Nike for a while, and I didn't quite catch the bottom on that. It's really difficult to do that, but it's been pretty low, and obviously in the last week or so, it's been recovering. But when I looked at Nike, I looked at the financials, and it's got growing sales. The net profits are just about growing. And when I looked at the balance sheet, yes, it's got debt, but it's got more assets than debt, and it could pay off its long-term debts if it could. So the financials are pretty good, but when you look at how far it's dropped down, obviously, I thought Nike is one that's going to have a quite good recovery. So that's why I bought that one. So I'm looking that to recover. Obviously, my Chinese stocks, my Alibaba, Tencent, are having a massive drag on my portfolio. They're still down, although there's been a lot of improvement, especially in the last few weeks. The China market has recovered quite a bit and beginning to see shoots of possible recoveries. But we've said that before and things happen. I've done a whole video, or a double video recently, all about China and the Chinese stock market and the Chinese stocks and why I still hold the Chinese stocks. And if you're holding Chinese stocks, I've gone through in detail of my thoughts on that. So if you haven't seen those, then go check them out. Okay. Recently, I've also bought another Chinese stock, which is Yum China, and people will say, "Wow, that is just crazy! Wasn't that one of the stocks that was put recently in the press of possible delisting by 2024?" And it was. But when you look into Yum China, it's actually an American company that operates in China, and it's obviously got things like the KFCs and stuff like that in its portfolio, and it's just so cheap that I just thought it was worth a small stake in that, because I can see that recovering. I don't think it should be that low, so I'm hoping for I'm only holding that stock maybe for 6 months. Hopefully a nice recovery when things calm down, and then possibly sell out. That's just an opinion. I've only put a small stake in it, so again, I'm only putting something that I'm comfortable losing. Then that's why I've only put a small stake into that. As we go down and we look at my allocation and my portfolio allocation, as you can see, my top 4 positions in my portfolio are Meta, which is obviously Facebook, Alibaba Games Workshop. So 3 of the 4 are actually down and having that's why it's having a big drag on my portfolio. The only other one obviously is the S&P 500, which is recovered and doing quite well. As Alibaba and people like that, I think is a longer term recovery plan. But as far as people like Meta, I can see that recovering definitely by the end of this year. So I'm not too worried about that. I think what's happened with Meta will correct itself, and I can see that correcting itself by the end of the year. So I'm not at all worried. I mean, obviously Meta holds my biggest position in my portfolio, but I'm happy to hold that, and it will do. I believe by the end of this year that will be in a plus. And then we move on to things like I set up at the start of the year, after reading about Ray Dalio's all-weather portfolio and studying into that. I thought it would be a worthwhile experiment, and I started at the end of the year, not expecting all that's happened so far this year with everything that's gone on and the big corrections, etc., and the difficult times out there lately. So yeah, I started that in January as just an experiment, only a small amount of money, just to see how the all-weather portfolio would stand up under current circumstances. And it's definitely been tested in the last 3 months with all that's been happening. So it's been really interesting to see how that has worked. Obviously, it's meant to be a balanced portfolio so that in all different situations, the portfolio pretty much stays safe. So when we look at, I mean, I've tried to get it as close as possible to Ray Dalio's suggestions. Obviously, he uses US suggestions as far as bonds, long-term bonds, short-term bonds, commodities, gold, etc. I've had to use a lot of UK's versions, so it's fairly close. But when we look at the all-weather portfolio, it's only -3% down, which I think is pretty good, considering there's been a lot going on lately. If we look at long-term bonds and short-term bonds or gilts, yes, they're down at the moment, and that's slightly taken that portfolio down. But then we look at, say, gold is doing reasonably well, and we've got the all-world ETF, stock ETF, and that's just about even. But commodities is really doing well, and I think with everything that's happened, with the oil prices shooting up, and obviously gas prices shooting up, the commodity part of the all-weather portfolio has done fantastic, and that's sort of balancing out the other stuff at the moment. So it's been really interesting to see how this is performing, and under these really hard, difficult circumstances, the all-weather portfolio has never really been more than -5% down at all this year. Okay, so that's my portfolio for March for Trading 212. Hope you enjoyed that. Remember to subscribe and like this video, and I've got to get back to work, so I shall see you soon. Take care. Bye.